about what the global setup is looking like. We've got Ed Yardeni joining in on the show right now. Ed, hi, good morning. Good to have you on the show, and evening to you. Just wanted to understand, what is it that you're making of the globe, getting closer now to Trump's official transition? What are we hoping to hear?
Well, I think what we're likely to see from the inauguration of the new administration, everybody calls it Trump 2.0, we're going to certainly get a lot of executive orders right away, focusing on deregulation, on immigration, possibly anticipating some changes in the tax laws. And of course, all that is going to have some impact on the deficit. So it's going to be a lot of policy initiatives. We're going to have to wait a while to see what gets through. And once it gets through, we'll all be trying to assess the economic impact. I think on balance, it'll be okay for the economy, but for right now, it creates a lot of uncertainty.
Certainty is something which is really, Street doesn't like. And Ed, is that something what we are seeing in the 10-year yields right now? Closer to 4.7 thereabouts. Where do you think they are headed?
Well, there's a few things going on in the financial markets, particularly the bond market, as you're asking. We have seen the bond yield go up 100 basis points since the middle of September. At the same time, we've seen the Federal Reserve lower the federal funds rate by 100 basis points. So the bond yield's up 100 and the Fed funds rate is down 100. So the bond vigilantes, as I like to call them, are disagreeing with the Fed and basically arguing that the Fed might be stimulating an economy that doesn't need stimulating. And you know what? It looks like they're right, because Fed officials are starting to indicate that they may be going on pause here. They may not be raising and not be lowering interest rates anytime soon. They won't be raising them anytime soon either, but it looks like rates are going to go flat. But look, I think a 4.5% bond yield plus minus 25 basis points is the right level. It's the kind of a normalizing of where rates should be.
And that's exactly what I wanted to talk about, the rate cut trajectory, Ed, because many believe whether or not at this juncture rate cut, or rather the pace of rate cuts, are even warranted.
Well, exactly. And I think I did not believe back in August of last year that the economy needed rate cuts. I thought the economy demonstrated over the past 3 years how resilient it was in the face of tightening of monetary policy. But the Fed went ahead. They didn't listen to me, and they went ahead with a 100 basis point cut. But now I think they're coming around to the idea that the economy is doing fine. Inflation is not quite at 2%. And meanwhile, they're starting to worry about the potential inflationary impact of the incoming administration with regards to tariffs and, of course, with regards to deportation.
What do you think is the problem area with India right now? I mean, is it just the dollar index strength which is taking the, making the FIs pull out the money, or do you see some structural issue as well with the Indian markets?
I think there's a lot of uncertainty related, of course, to Trump, but there's also a lot of uncertainty on a global basis. We see political instability in France and Germany and South Korea. There's a lot of jitteriness around, and that's actually favored the dollar. Commodity prices have remained weak. China's economy remains very, very weak. I think there's sort of a flight to quality, and where people are flying to is to the United States, which is why the dollar has been strong and why our stock market has been also quite strong. So I think as long as the dollar is strengthening like this, it means that emerging markets generally are going to underperform, especially underperform the U.S. And India is still viewed as an emerging economy, but I think of all the emerging economies, its prospects are probably the best. So I don't really think that the jitteriness in the global financial markets is going to be as problematic in India as it might be in some other places.
Okay, Ed, on that note, we let you go. Thanks so much for making time and speaking with us today. So that's the view coming in. It does look like rates are at the right level as far as 10-year is concerned. The pace of Fed cutting down rates might be slower. And of course, US might just continue to outperform with the kind of dollar strength that we are seeing.
If you like this video, then like, share and subscribe to ET Now.